What's up guys, and welcome back to my channel. So in today's video I'm going to be showing you this simple and easy to follow strategy with very few rules that you're gonna need to follow, but you're gonna make big money using this strategy. So it's a spike strategy, so we're gonna be using this to catch what? To catch spikes. But the same strategy can also be used to catch to trade ticks, but I'm gonna save that for another video. Okay, so don't forget to subscribe, like and share the content. Okay, so let me jump into it. Okay, so this is not a price action video. Okay, so we're gonna be using some indicators. Okay, we're gonna be adding 3 EMAs. So let me show you how this is done. Okay, so as usual, we click this F right here, that F, yeah, so that we can add our indicators. Okay, so these indicators we're gonna be using 3 EMAs, 3 exponential moving averages. Okay, so the first one. So let's click right here, which says moving averages. Okay, moving average. So the first moving average we're gonna be adding is moving average period 13. Okay, 13, and then done. Okay, period 13, shift 0, method exponential, apply to close. Color I'm gonna be choosing red. Okay, you can choose any color of your choice. It's all up to you. And then click done. Okay, so that's 13 EMA. This one, trailing there. That's it. Okay, then the next moving average you are going to be adding moving average 50, moving average period 50. Okay, so don't forget to watch this video to the end so that you know how to use this strategy. Okay, and the rules that are needed. Okay, so exponential close, color I'm going to be choosing black, and again you can choose any color of your choice. Okay, those are 2 EMAs. Now I'm gonna be adding the final moving average. Okay, this moving average is going to be moving average 200. Okay, so then click done. Oh, I forgot to change the color. This moving average, I'm going to be choosing purple for the 200 moving average. Okay, so that's it. These are the only indicators we're going to be using for now. I'm going to add some more indicators later, but I want you to catch the basics first so that you get the strategy easily, so that when I add more indicators you won't get confused. At least you'll be used to this indicator, this strategy. Okay, so as I said, watch this video to the end to know the entry rules and the stop loss. Okay, so in today's video I'm going to be talking about how we're going to be using this strategy to catch spikes. Okay, so this strategy works on any time frame, but I prefer to use it on the M5 and M1. Okay, that's where I get more entry opportunities. Okay, unlike using it on the high time frames, I've only used it for entry confirmation, for trend confirmation. Okay, so as usual we're gonna be using the 50 and 200 EMA for our direction for our market bias. Okay, so when the 50 and 200, the black and the purple cross here right there. Okay, that gives us our confirmation that the market is in a bearish trend right now. Okay, so this is the M5. So this is where our EMA is crossed right here, somewhere here. So starting from this point right here, going forward until this moving averages, the purple and the black, cross again to the upside. I'm only going to be looking for sell confirmations. Okay, that's I'm only going to be looking for sell opportunities. For crash, so for crash we're going to be looking for sell opportunities using this strategy. So we are going to be looking for whenever this EMA is close to the downside. Okay, and then for boom for the booms, we're going to be using this strategy to buy. Okay, so we're going to be waiting for confirmation for these EMAs to cross to the upside, like as in here. Okay, but since today we're looking for spikes on crash, we're gonna be looking for sell confirmations. So starting from this point right here, that's when I start looking for my sell positions. Okay, so As I said, this strategy works based on what? Works based on the M15, M5, and M1. Okay, but I use it on the M5 and the M1. Okay, so the rules are simple for this strategy, guys. So first of all, just look forward for this one golden cross right here. We're right there when the purple and the black line cross. Okay, that's the 50 and 200. Whenever they cross, you start looking for entries in that one direction. Okay, so for this strategy, we are after this one, after the black and purple cross, we're gonna be looking for that whenever the black and red line cross. Okay, after the red and black EMA cross right there. Okay, so after that we will start looking for sale opportunities. So for the entry rules, okay, for the entry rules, you enter whenever price. Let me zoom in my charts a little bit. Okay, so as you can see, the 50 and 200 crossed over there, way over there, and then here we've got what, the 13 and 50 cross right here, the red and the black. So when they cross, you are gonna be looking for whenever the market pulls back to the red DMA, this red DMA right here. So whenever the candlesticks come close or touch this EMA, but on the 5-minute time frame, we're only gonna be looking whenever whenever it touches the red moving average right there. But for M1, for the 1-minute time frame, you can enter a little bit earlier before before the candles touch the red moving average, because the spike may occur before the candles touch the red moving average. Okay, so just a candle before, that's on the M1, just a candle before the touch the red moving average, you enter your position. So after that, for the stop loss, so as you can see, we would have taken our entry right here. The stop loss, you exit after three bullish candlesticks, or after three opposite candlesticks right there. So one, this we do not consider this is a full candle. We only look for strong momentum candlesticks like these ones, or the 1, 2, 3. These candlesticks, they are strong momentum because there's no wick right here. So we only look for 3 candlesticks with no wicks. Okay, after 3 candlesticks with no wicks, okay, we exit the trade and take the stop loss. Okay, so whenever so for this is one candlestick. This candle here, it's weak right there. It has got some weak, so it's not showing momentum, so we don't count this candle right here. Then for this one, we consider this as our second candle. So before the third candle, before we had a third candle to the upside, the spike started occurring. So you enter your first position right there. First TP will be obviously right here. Whenever we have this support right here. Okay, so we would have entered there. This is our first entry right there. Then we've got another pullback right here, right there. The candlesticks put back to the 13 EMA. When they touched, we didn't even have this was this trade was straight into profit. Then we had moved down. Okay, then for this next retracement right there, we had one candle to the opposite side, and then we went straight into profit. Okay, so this is how we're gonna be using this strategy. It's not a holy grail strategy. So for this right here, our stop loss would have been hit right here. Okay, although it moved down perfectly right after that. But first candle, 1, 2, 3 would have taken out our stop loss, but would have lost a lot of money, because just after closing our position, the market went straight down. Okay, so this is how you use this strategy. Okay, so yeah, right there, when the candles put back to the 13 EMA, we now move down, right? So that's how you enter. Okay, so this is what for the first position. And then after taking what the stop loss, at times the market doesn't the market refuses to spike what at the 13 EMA, but you catch what other spikes on the what on the black moving average, the 50 EMA. So if price rejects what rejects right here, taking for example sort of somewhere like this, we would have what taken our stop loss, then we'll wait until price reaches what the black moving average right there, then what enter another what position. So for the black moving average, our stop loss is going to be 5 candles. Okay, for the 13 EMA we are saying what 3 candles. For the black moving average we are saying 5 candles. Okay, so 5 candles for the stop loss. So right here it didn't reach the what the 50 EMA, but there's no need what to stress yourself, because market gives you what more and more opportunities to enter. Don't ever feel like you're left out. Okay, so right here is taking what for the taking the current situation right there. Right here would have taken out first entry right here. The market didn't spike, so we have 1, 2, 3 candles with strong momentum. Then we take out our stop loss right there. Then we wait for what for the market to reach the 50 EMA. Then we enter out another position. As you can see, the trade would have been in what in profit. I didn't see this at the time it was occurring, otherwise I would have what taken my entry right there. This was a perfect trade. It went straight into profit just after entering, straight into profit. No loss that there. Okay, so as I said, I also use this strategy on the 1 minute time frame. So let me show you what on the 1 minute time frame. So right here, so this market is what choppy. As you can see, this on the M1 on the 1 minute, the moving average is close to the upside. So I'm not looking for sell positions at any time in there. Okay, and then when the candles cross the 250 cross here, I enter my first position here. Stop loss after 3 candles, and then when price put back to the what to the black moving average, it spiked. Okay, then the EMA is crossed back up to again. Then I wait for again forward here when the moving average is crossed back to the downside. Okay, then I want to start looking for my sell entries. Okay, so right here, so when these ones cross 5200 cross first, then we check if the what 1350 cross is also in what in our favor. Okay, so right there, obviously we didn't enter right here. Then when price put back to the 13 EMA right here, we enter what our trade. It would have hit our TP. It would have spiked right away, and then right here we would have entered the what our position. Although this probably would have hit our break even. So when the candles spike, when a spike occurs, we move what our stop loss to the what break even. Okay, so that we prevent what a loss. Okay, so right here, when candles put back to the 50 EMA, we count what 5 candles. Okay, 1, 2, 3, 4. Then the fifth one will be this one. So we exit right there, and then the 50 and 1350 cross to the upside. So we are not looking forward entries in this one was this time frame, this time right there, and then right here our entries would have entered our first position right there. Count 3 candles, 1, 2, 3. We exit. Wait for the what? For the candles to reach the 50 EMA. We enter right there, and then this it spikes. Enter right there, it spikes. Enter right there, it spikes. Okay. Then this one would have probably hit our stop loss. So that's it for this video, guys. So stay tuned for more. I'm gonna be posting. We can also use. I'm gonna be posting a tick strategy very soon. How we are gonna be catching what ticks. Okay, and then I'm also going to be add what some other indicators for what to aid in this what strategy right here. Okay, so that we catch what the spikes more frequently and without hitting our stop loss frequently. Okay, so stay tuned for more. And if you watched the video, thank you. Then subscribe.